Hello, I'm Adam Grimes, and welcome to Market Life Chart School. So this is being recorded January 24th, 2018, and I want to point out what is kind of an odd pattern in copper. It's odd in that it is unusual, and this occurred in the context of a bull flag. And one of the ways that bull flags, and if you don't know, when we say bull flags, we're just talking about these types of consolidations and trends. They can take lots of shapes. They can be simple rectangular flags. They can have different types of converging patterns. So you're looking at something that might be considered more of a wedge of some kind. They can also have a lot more structure and have multiple waves. But the concept is that we're looking for a thrust in a trend and then looking for that pullback against the trend and the trend to continue. Now, one of the ways these patterns fail is that, so typically we look at that and then we expect upside. Well, they can fail lots of ways, but one of the things that can happen is they just kind of dribble down and then pick up some sharp downside momentum and collapse. That's a very typical failure pattern. So if we go over to the chart and I take off the last day, we're looking at something like this. This appears to be a failure of this bull flag. And in context, this has been a pretty long uptrend. There's good support on higher time frames. We don't need to get into that. There are lots of reasons that we might be looking to buy an upside breakout. And I've had my Waverly Advisors clients in and out of a few good copper long trades, and we're looking for another long entry. And so we're kind of stalking a long entry, looking to buy somewhere up in this area. And I don't even think you have to be terribly precise about where you buy. But what happens? Well, instead, we get this sharp down day. This is something like a 3+ standard deviation down day. It also comes after a very tight consolidation around the moving average. You have the series of 4 bars that are very tight around the moving average, and then a breakdown below key support. This is the type of move that typically will generate a lot of additional downside. Now, that's not what happened. In fact, if you look at the sigma spikes in the bottom right-hand corner, you can see this big reversal. You have maybe it's bigger than I thought. 4 standard deviations down and then 4 up, and you see the pattern on the chart. And at this compression, maybe those bars don't really jump out and hit you as being big, but they are. They are very big, and if the chart is scaled a little bit differently, then they really, really jump out. So this is unusual. Now, what do you do with this? So here's a case where quantitative testing might mislead us. If you go through and test big up and big down or vice versa, and you use some type of volatility adjusted measure, you won't really find an edge. At least I haven't in most of my work. And one of the reasons is that this is so rare. This really doesn't happen a lot. And objectively, there's no particular quantitative edge to the pattern. However, this is a bigger pattern. And let me just zoom out to the weekly for a moment. So we're looking at these ongoing consolidations on the weekly time frame. And these are the patterns that we are very interested in trying to capture a move up on this weekly time frame. And if that is your motivation, then this daily pattern all of a sudden gains richer context and becomes more interesting. So I'm suggesting that if you do trade copper or copper stocks, a number of mining stocks that are very tightly tied to copper, I think now after this shakeout, you have good motivation for looking for additional long trades. And it's an interesting pattern. It's an interesting pattern from at least 2 perspectives. One, just being aware that it's a very typical failure pattern for a bull flag. And when that happens, sometimes it's very easy to feel like a little child and just kind of, throw all the toys back in the box and say, I'm done. I don't want to play anymore. Because you've been watching this for several weeks, probably for a long entry. And you probably were not long, so you didn't actually lose money on the trade. But it's a little frustrating to expend mental energy day after day watching for the right entry, and then the market breaks down. It's easy to get a little frustrated with that, but you can be frustrated. We're human. You're going to have an emotional reaction. What you can't do is stop looking at the market, because sometimes you get a nice surprise the next day. So let's watch and see how this plays out. But regardless of the outcome, this is a good pattern to consider and to have in your toolkit. Go to marketlifetrading.com. If you found this someplace else, we have a free trading course you should check out. A couple subscription options with a pretty cool guarantee. If you don't like them, I'll buy you lunch. So, if you have been through the course, you've heard me say over and over, there's no free lunch. Well, there's a free lunch guarantee. So I'd invite you to go to marketlifetrading.com and check out our Plus and Premium memberships. Thank you very much.